Good evening, ladies and gentlemen, and welcome to the beautiful Great Room for another BSA Talk event. For the next 2 minutes, I'm going to talk to you a little bit about what Bangkok Startup Association is all about. So, we are on an unofficial mission to build the Silicon Valley of the East because we believe Thailand is perfectly positioned to get this next wave of startups. But there are a few core things that need to happen, and instead of waiting for it, we took charge and we start building it. And one of these is our events pillar. We do 30 events per year, ranging from talking events like this, all the way to big networking parties, like we have one coming up next month. Secondly, we have an incredibly large partnership network with 750 different players, ranging from Amazon, OpenAI, Google, to the local service providers, tech solutions, and you name it. And then lastly, our membership program. Here we help the startup succeed. We introduce the customers that you need, the partners, the investors, and help you with all these perks. So that's in a nutshell what BSA is all about, helping the founders succeed on the journey. Now, on today's event, it wouldn't be possible without our kind friends at the Great Room, with a special thanks to Kun Memo and Kun Boom over there. This premium, beautiful co-working space is host to many of the great investors and startups, and as BSA partner, we obviously have a special privilege for you as well. Secondly, big thanks to our partner, Voice Global. It wouldn't have this delicious food and drinks without them, and we couldn't do these events without the amazing support from Gagan, Manish, and others. And with that, I would like to reintroduce Alex. A lot of you know Alex as our MC, but very few know Alex's background, and I would like to tell you a bit more about it. He is an ex-futuristic speaker, flying around the world, telling big corporates and governments of where the world is heading to. Then he became a founder who built and sold multiple companies successfully before he joined his family office out of Denmark, where he is now building more future Southeast Asia, where as a single investor, he has deployed more capital and written more checks than some of the firms combined. And with that, please give a round of applause to Alexander Avant, our host for tonight.
That was a very nice intro. Doesn't make me nervous at all. Good evening, everybody. Welcome to the Great Room. As Billy mentioned, my name is Alex, and the beauty about this being the Great Room is kind of also in tonight's theme, more of a war room. Today's topic is capital in chaos. And I know that many people here have a different approach to what that might mean, and I think my promise to you tonight is to uncover a bit more that not everything in crisis is bad. Really? I think we need to turn these off. Who joined the last BSA event with the microphones? Yeah. We have learned, all right? We have learned. You know, they say AI is easy, AV is still hard, guys. So, tonight, the topic of chaos or crisis is an interesting one to unfold. I learned just tonight, speaking with a few of the attendants here, that crisis, the word in Chinese, apparently is the combination of two words, danger and opportunity. And if you look back at the last 12 months here in this world, you've seen everything from AI basically stealing jobs across the nations. You've seen tariff wars. You've seen real wars across many different paths. The oil crisis. You've seen scams blow up, such as e-fishery. We have a bit of a new world to unfold here when it comes to working in uncertain times. Luckily, we also have two speakers tonight who have their own perspective of how to work and navigate through this uncertainty. And I'm very happy to invite our first speaker, Gagan, to the stage. And Gagan would like to speak a little bit about what his perspective is on crisis in capital, and also a bit more about how you are navigating this uncertain space. So, Gagan, please approach the stage. Feel free to take a seat or stand, or there's no formality in this. But I think the first state would, what is Voice Global? What is your approach to this? What does capital in chaos mean for you? interesting to just hear a little bit of what your taste is on this subject first.
Well, thanks, Alex, and thanks, Billy. First of all, it is really, I'm really happy to be here and partner with Bangkok Startup Association because they allowed us to collaborate on this event. So it means a lot. Thank you so much. And welcome all of you to take out your valuable time to be here tonight. I know it was raining, so probably traffic would have been bad. So glad to see such a good turnout. So first, a little bit about myself. My name is Gagan. I am founder and CEO of Wows Global. Now, what does Wows Global do? We are essentially an investment banking platform where we work with venture-backable businesses as well as SMEs and give them access to capital. So there are two parts of our offerings. One's the upstream and one's the downstream. For the upstream part, as I said, we help companies raise capital. It can be equity capital, which we have a large network of investors, be it venture capital firms, ultra-high net worth individuals, private equity firms across the region, which we can get you access to. So that's one. And the second part, and in today's time, arguably even better part, is the debt. We facilitate debt financing, either through our partners or directly through our balance sheet too. We have a small fund, $3 million US, of $3 million size, where we can do balance sheet financing as well from our own pocket. So that's one part of our business, raising capital, equity, and debt. And the second part is downstream, where we step in as fractional CFO of the companies. I was just talking to a gentleman here probably 10 minutes ago, where I was telling that how most of the companies, be it startups or SMEs, have accountants as their head of finance, right? So they know very well what withholding tax is, what VAT is. But when you talk about the complex things like corporate structuring, like TFRS, like unit economics, like the cost of acquisition, payback period, not many accountants are trained to do that stuff. So startup accounting or early stage company accounting is very different from traditional accounting. So we solve the bigger part, which helps company raise capital, because we understand once you're there in the market, what needs to be done. So we are experts in that. So we work with founders or C-level execs of early stage companies and help solve that turbulent things for them. So that's what Wows Global does. We are headquartered in Singapore. We have the BOI license here in Thailand, and we have teams on the ground in India, in Indonesia, Vietnam, as well as Philippines. So we are regionally present. Now, coming back to your question on capital in chaos, what does it mean? I mean, it sounds very heavy actually when you read this, but it's actually pretty simple. It's a mismatch of expectations. That's it. And that's why both the parties are struggling. Because founders are still raising the way they used to raise in 2021 when the capital was cheap. They're still following the same playbook. Whereas investors, on the other hand, are underwriting based on the revised rules of 2026, which we'll be discussing how the rules have changed. So because of this gap, there are very few deals happening in the market. And what is happening is the founders who are actually raising, sometimes people misconstrue that they are raising because they are very good fundraisers. But actually that's not true. They are raising because they're extraordinary builders. And they know what will sell to the investors, and because the metrics that they have supported, that's why they are able to raise much faster and larger amount than the other founders who are struggling to raise. So I can go on and on, but in a nutshell, it's mismatch of expectations.
All right. Thanks, Gagan. You may take a seat.
Thank you. Thank you.
So as you hear, Gagan has a lot of insights, and Wows Global basically deals in the front lines of capital raising, fundraising, understanding how to put capital to work, understanding how to communicate in a proper way, in a convincing way, in a true way, how you can grow a startup in the sense of getting the right investors on board. Now, how do you then grow an actual startup? Like, what is the practice for that? And for that, we luckily tonight as well have a great speaker and someone who I've been working with some time, and that is Abby. Abby from Living Roots. Abby, please approach the stage, please.
Hello, everyone.
So, same question, Abby. I'd be curious to hear what is Living Roots, if you could tell the audience, and also what is your perspective on this topic of capital in chaos?
Yeah, absolutely. Well, first of all, thanks so much for having me here. It's very cool. I'm Abby. I'm a computer scientist turned farmer, and now I'm back to running a startup, which has been kind of a weird journey. So me and my co-founder ran a commercial farm for about 5 years. And in that journey, we realized that there were no alternatives for farmers to chemical fertilizers. So what we do at Living Roots is we provide that. We have a naturally derived, biologically driven alternative to chemical fertilizers, which over 5,000 acres, farmers have seen a 35% yield improvement from 50% to 100% cut on fertilizers. And so a lot of my job for the last 5 years has been to see how do we improve domestic fertilizer production? Because as we're seeing now, when prices go up by 40%, like because of the war, like urea and chemical prices have gone up by 40%, farmers really struggle, and that cost is not bared by people who are purchasing the food, and so it gets absorbed into their livelihoods. So a lot of what we do is that we produce that. In Capital in Chaos, we are trying to really scale up our business because we see an opportunity. Our products were the same price as conventional fertilizers a year ago, so now we'll have an opportunity to now go to a lot more farmers, scale up our business, and really try to see if we can make Thailand fertilizer kind of dependent? Yeah. But almost 95% of fertilizer in Thailand is imported, which is quite scary when you talk to farmers because there's no other alternative. So we're trying to provide that. But yeah, so nice to be here.
Thanks, Abby. You may take a seat wherever you want to sit.
Yeah.
Should I sit in the middle?
Yeah,
oh, wow. Okay. Now I feel like I'm in the hot chair. So the way this format works, everybody, is that we are going to speak for some time. We have a few topics I'd love to unfold with the speakers, and then we would love to hear from you as well. If you have questions, the way we do this is that we reserve about 20 minutes at the end of this talk for questions, and then afterwards we go straight into networking. So if there's more questions you have, please respect the speaker's time as well, and approach them and ask the questions if you want. But the way we do this is in a very, very casual basis, because I think one of the most important things that I've learned, not just dealing with the current environment, but chaos when it introduces itself in your life or in your portfolio, is that you have to keep calm, right? You can't panic. If you panic, you lose. That goes for decision making, that goes for fundraising, that goes for a number of different decisions. So I think we should start from the beginning, right? Because we have on my left side a founder raising money, on my right side also a founder technically, but someone working more in the fundraising and the structuring of finding capital. And I would love to try and unfold a little bit here about what we're dealing with here. So Gagan, if you don't mind, people speak about a fundraising winter or a capital winter.
Yep.
Is this true? And if it's true, is there any outlook on it being, resolved hopefully soon?
Yeah. Short answer is yes, it is true, and it's backed by data. Like just a high level numbers. So in the last 12 months, or say last 18 months, roughly $8 billion have been invested in the private sector in ASEAN as a whole. And this number was close to $30 billion in 2021. So we are literally looking at 80%, 70 to 80% decline in the investments. So that essentially, if funding winter essentially translates to lack of liquidity in the market or lack of investment activity in the market, that's true. But the other trend that we are seeing is that the overall structure also of the deals is changing. Structure as well as size. So structure can be quite complicated and geeky, I don't want to get into that. But in terms of size, to give some context to the audience here, Series A, so for those not familiar what Series A means, so startups have multiple fundraising rounds. And Series A is a round typically when companies have started generating revenue with a sizable number of users, and then they are raising growth capital. That's Series A. So the Series A round used to be $5 to $7 billion on an average in the region in 2021, because that was a peak of investment activities, peak time of investment activities. Now that number has dropped to 3 to 4 million, again roughly 50% decline. So again, which proves that, okay, this, not just the total investment has gone down, but the average size per investment has also gone down. Third trend is Series B and above investments. So Series B, as you can imagine, Series A is first stage of investment, Series B is once the company reaches further scale. Series B and above investments have gone up. So of this $7 to $8 billion that have been put in, 80% of the investments have gone to companies Series B and beyond. This number in 2021 used to be 65 to 70%. So that means the investors are betting less on early stage businesses and more on mature businesses. So this is the trend that validates. Now that's on the startup side. But here's a flip side of the story. The investors are also, looking for capital, right? So they need to raise capital too. So even the VCs themselves are facing their own share of challenges to raise more capital that they can further invest in the startups, because VCs manage somebody else's money and invest somebody else's money. So they are also facing the challenge because of many reasons, and they have invested at the companies at a higher valuation previously. So LPs, limited partners, the people who have given them money are asking tougher questions. So in that case, what is happening is VCs are not able to raise that much capital. So they don't have much capital, where will they put in money? So because all the data essentially interrelates. So now VCs are only looking at a company that can give them enough return that can return the funds. So large outlier. So yeah, long story short, data backs it, the times are not ideal.
So it sounds like that this is not just startups not being funded, it's also VCs having a constraint on limited partner reach. Where does the money flow then?
US stock markets. Look at the return of Magnificent 7 in the last 5 years, 30% IRR. And even the S&P 500, 12 to 15% IRR. When did you ever see these kind of returns? So the whole concept of startup investments was the bond market, the stock market used to give you mid-tier returns. So bond market 2%, 1.5% annual, stock market 6%, 7% annual. So these startups and these early stage businesses used to be looked at a high risk but high return investments where you could 3x your money, 4x your money in 2 years. But what has happened in the last couple of years is that bond interest rates went up, so people had a better place to park the money, which is less risky. Stock market started giving a lot of returns. Treasury market, okay, it didn't improve at that scale, but still okay. So people found better avenues, safer avenues to park the money, but still decent returns. So obviously when you choose between two options, you pick the bet where you are making the good returns. So yes, that's where. So there's liquidity in the market for sure, but it's not coming to the industry where we operate.
Yeah, I was trying to think of a clever way of saying, but you're not right. But to be honest, 4 years ago, my wife told me to park money in the stock market, and that's been performing just fine 4 years ago. However, there are of course outliers.
Yeah.
There are outliers of these startups, and Abby, I know, I was one of your first investors about 2 years ago. When the crisis was on its peak. So, how have you felt this fundraising winter as a founder?
I mean, it's been truly interesting to see it from our perspective, just because it is true that there is a funding winter. It's quite significantly difficult to raise capital from what people have told me before. I think the real thing is we focused a lot on the fundamentals before we started to raise money. So we really thought about having proof, having customers, and I think since when we started our pre-seed round, we already had a few customers, so that made it slightly easy to convince people to give you a check. But I think if we didn't, then I think it would have been a significant journey. So I think traction is quite important in terms of even getting that access to investors, but also just finding the investors that are right for you is equally as important. If you are not a venture backable business, don't look at that. We decided that quite early. It was almost took us a year to be are we a VC business? And we were maybe it doesn't make sense, because I come from a tech background, so my kind of understanding of capital was always you have to have this growth journey and you have to raise capital in this way, but there are alternative journeys you can go on as a founder. And then once you are at that size where you're am I VC or not, you can pick that. So we've pushed it a bit further. It's almost 2 years now, but we have, we're giving ourselves a few more years to be let's grow a bit slower, and if we find this thing, we will take it if we need to. But I think it is good to step back and be what is my business, and can I grow it slightly more sustainably and then scale it when I need to. So I think that's been our journey. And even impact investors are looking at much higher due diligence now. So it's not like philanthropic capital is like, for us, it's like we can get it because we work with farmers and we work with businesses in that way. So, but it's equally as difficult. I think everyone is finding it more difficult, but you kind of just have to find customers and find the right path for you.
I mean, it's a funny comment, right? Because from my right side here, I hear that the LPs are putting more pressure on VCs to find, either better, stricter deals, right? That can yield better returns. And on my left side, I know that you just closed a round. And I remember you told me, we're going to raise money. We're going to be closing in a month. I don't have time to do long DDs. We open it, we close it, and that's what happened. So I'm curious to kind of throw this question to you, Gagan. Are VCs putting higher demands on startups in terms of what is investable or not? And should startups then also throw high demands on investors? Like, are we just raising the bar here? Do we just want to see better results all across the board?
Well, I don't think so, because unfortunately there is a power dynamics, right? And investor in this case is more like a customer, and customers can be naturally demanding. So there's always a power. Like if you're an investor, you have a lot more choices, just like any other customer. You can go to other shops or explore other products, right? So same thing investors do. So somehow, unless you have built something which has the traction which is not ordinary, and then of course there are more people, more takers, then you can be in that situation. But unfortunately, 90% of the startups are not in that situation. They have some proof, they have some traction, but it's never enough for VCs, no matter what they do. So they are always, they need to be, abide by the rules, right? And if revenue is not there, then to the scale that's needed, you have to follow their terms, not your terms. But one thing which is interesting, in particularly in living root cases, like closing a round in 4 weeks doesn't happen that often. And of course, it's his story, so I would want to learn what you did right, but clearly there's a playbook, that I can tell you. Even in this tough time, there's a playbook. And there are two sets of rules which you should follow. And the first rule is the rule of 2 T's. What does that mean? Know thyself. That means that you should either have track record or traction. So if you, for example, are ex-Ivy League or ex-FANG company CEO, then of course you have a track record. So investors would want to fund you because you have a track record backing you, or a previously exited founder in that case. Or if you don't have a track record, you should have traction, which is not ordinary. You should have a proof that there is a demand there for your product. The gross margins make sense, the unit economics make sense, the payback period is well within the industry norms, and you can scale it to the next level. But if you have neither, then you have a very small chance of raising. So first is you need to put yourself in that map, track record or traction. The second is identify the right kind of investor. As Abhi also said, for the first year, he was simply evaluating whether he's a VC, he's building a VC business or not, right? So, I mean, the VC business, to put it simply, is a hyper scalable business. The business can go from $0 to $1 million in the first 6 months to 1 year, then $1 to $10 million within the first 3 years, then $10 to $100 million within the first 5 years. If your business cannot produce that kind of growth, it is not a VC backable business. It can be a great business. Like my business, I love my business. It's a services business, great margins, pays our bills. I love it. But is my business a VC backable business? No. Can we reach to $20, $30 million revenue? Absolutely. But still it's not VC backable because my business cannot become a $100, $200 million revenue business over the next 5 years, and that's a reality. So understand whether your business is VC backable or not VC backable, and based on that, identify the investors. Now, angels are the first way to go, and angels are the people who invest early, and that's usually backed by your track record, your credibility in the market, plus they should get conviction through you on what you are building. And second, and a very important set of investors, which many people ignore, are your customers. I have seen so many cases where people are able to convert their customers as their investors. One such example is of this company called Guestacy, which is a very interesting company. They used to provide hotel software. So they sold it to one of the hotels, and the hotel guy liked it so much, he put in $100,000 check overnight because he wanted to be part of the company. So rather than approaching VCs and hearing no and demotivating yourself, identify which investor would best fit and then target them correctly. Only then you'll be able to raise fast. Otherwise, you'll go into a vicious circle of speaking to 200 guys and hearing no's probably 199 times.
Yeah, you wanna really save your time on that one. So just to summarize, it sounds like the 2 T's, traction and track record.
Yeah.
Right?
Yeah.
The 2026 playbook for startups is to weigh whether or not you are competing on both those tracks, you have those two, and to what degree you can present it as something that's impressive, obviously. The second thing, which I find quite interesting because it made me think about how we met, right, is find your investor. And I agree, like, everybody, equity is not rational. And this was something I learned with my startup. You have an investor that has 10%, you have an investor that has 0.5%. They're both demanding, right?
Yeah.
So you're married to these people. Do you want to be married with someone who gives you a bit of money and then suddenly you have to answer to them the rest of your startup's life? You're bound with these individuals for the better and for the worse. Abby was one of, I still tell this story as one of the most, like, it's not very impressive, but it's just surprising. He was the only person, still to this day, that has ever reached out via my website. Everybody else reaches out either through, LinkedIn or WhatsApp, or you took the time, and I find it very amusing. You said, well, you're the only kind of impact investor in Southeast Asia. I was like, well, that's not true, but that's fantastic. So I'm curious as to kind of backtrace a little bit, because now, 2 years later, you clearly have traction. But what was the playbook you started out with when you began to raise capital with Living Roots? Does it resonate what Gagan mentioned here?
Yeah, I think it definitely resonates. I think finding the right investor and either traction or track record make a lot of sense. But I think some part of this was also just like having a genuine connection, and that's a lot of times surpasses your traction or track record. Like, I think we just convinced some people that we had a good product and we could do it, and like that's all you kind of need at the beginning. And then there is a little bit of genuine interest. So like we spent a lot of time looking up our investors, and Alex, I watched some of his YouTube videos, whatever there was, and I was like, this person makes a lot of sense for us. And then we try to just target the people, or not target, but have a conversation with the people that make the most sense. I think that was the easiest way. Like, when you really just have nothing but an idea, and you're like, we live on the farm and we have this product and it's worked with 40 farmers, like, will you give us this check? And yeah, I mean, you send that in an email and they're like, I can meet, but and you just have a conversation. You're like, okay, I really like your background and it makes sense for me. But a lot of the times it's just trying to understand who you're pitching to and kind of tailoring it that way. And so every email we wrote was different. Every pitch was different. Every slide deck I made at the beginning was like for that person. And I think that's the level you kind of need. And then once you have the traction, now it's just still very difficult, but it's slightly easier because we have spent years, like we have investors that just invested in this round that I've been speaking to for 3 years. And then I just emailed them monthly being like, this is how we're doing. And like 36 months later, they were like, okay, you're at an enough place where I can come in. And so I think it's just genuinely sharing that you're excited about what you're building. And I think the second one, we just love our product. So it just makes it easy to keep going and share with investors, because you're like, I made this, and they're like, that's cool. Like, I'm very interested in that. And then 2 years later, they're like, okay, it's time for me to come in. But I think it's just those things. It's just like a genuine interest. And people can kind of tell when you have that interest in you. So I think that was just what helped at the beginning.
I mean, I'll be honest with you. I think I first got the idea. I went to Chiang Mai to visit the Living Roots labs, and I actually mixed fertilizer myself with elephant dung. I was wearing a white shirt, I remember. I felt so out of place, but I was like, this is the product, right? And I think when it comes to product, which is the next topic I want to unfold a little on, we are merging into a world here now where I truly believe SaaS is dead. Like, at this point, I see no reason for why people should spend too much time trying to build a SaaS product if it's not defendable to some degree of community. Because I see AI, Claude, you name it. If it's not possible today or this year, it's going to be possible next year. So your moat is gone. So product for me has changed dramatically over the last 12 months.
Yep.
Do you see that as well in the funding track? Like, is there a different class of funding that happens on both the Series A and Series B side? And I mean, fertilizer is a pretty, you can't ask an AI to probably tell you how to make fertilizer, but it can't make it for you. So there's a capex problem there.
Not yet.
Not yet. Yeah, we probably don't have robots one day. But do you see that there's a switch as well on the actual product alignment of what is raising capital now versus, say, 3 years ago?
Yeah, 100%. But that has been the case in the past 10 years. There's always some industries which are people like more over others. So that's not different. Right now, the hot topic is AI, as you rightfully said. OpenAI, for God's sake, raised $122 billion in March. Never in the history of mankind that kind of money has been raised. So you can imagine the kind of capital flowing into AI right now. So AI is definitely very, very attractive for the investors. So that's one. Second, stable coins is a very, very interesting segment for most of the investors we meet, because US with Mr. Donald Trump making all these irrational moves, people are losing faith in US dollars. The only way, and people want different currencies, and stablecoin is probably one method that can probably partially bypass dependency on US dollars in the future, even though it's tethered to USDT, but that will change as well. So the stablecoin segment is very, very interesting for the investors. Climate tech, yes, the money is flowing, but again, in a very, very specific segments. Deep tech again, quite a few interested investors. Now, what's not working is definitely SaaS, because as you rightfully said, the moat, for those who don't know, moat means barrier to entry. Previously, you had to, like, if you're building, say, for example, an enterprise software, right, that can manage CRM and your other softwares and your booking engine, everything together. So companies used to spend a lot of money, millions and millions of dollars, to either build it themselves or buy an enterprise software and pay a monthly SaaS. But now, with all these vibe coding tools available in the market, you can build a basic framework very, very quickly, test it out. And so the cost of building is actually dropping. So you can build something with simply vibe coding. For those who don't know, vibe coding means natural programming language. So you can just write the code as you speak, and the system will code for you. So you can test that, and after that can get it built in the fraction of cost. So SaaS is not hot. E-commerce in specific cases is not very interesting, because the CAC, customer acquisition cost, and unit economics sometimes don't make sense anymore with market. You need a huge marketing budget. And third thing which I'm thinking, I'm seeing is actually not making sense for the investors anymore is all these, what you see, the Web3 companies that were previously there, like which were promising a very, very specific use case using crypto as an underlying base, but that investors are losing interest because utility hasn't been proved. So yeah, but again, this is relevant today. Like, what will happen in the next 2 years? Again, investor priorities change very quickly.
No, I think it's spot on. I mean, I believe this year as well, the Board of Investment also I think they've pulled the most amount of foreign direct investment capital into Thailand ever in the history, into infrastructure cost. Google is setting up, Amazon is setting up more capital here as well. There's a third one. TikTok is rolling in a lot of capital into data infrastructure. So money is there, right? When it comes to this belief that there is critical infrastructure needed to survive in the future. And we spoke a lot about critical infrastructure as well, because the big surprise is that 80% of fertilizer in Southeast Asia is imported, right? Why is it imported? Shouldn't a country be able to self-sustain on a product basis? What do you think?
Yes, I mean, it should. I mean, like, the crazy thing is, let's say Thailand currently imports $4 billion of fertilizer a year, 2 to 4 billion. But that means that money from the farmer is leaving the country to go to another country, and you never get that back. So if you buy like 10 baht of food, 2.5 baht has left the country, and like it's not staying here, which is to me it's a bit insane. And also, like, you create this dependency where your food security is now tied to another country's production and global wars, which it's all kind of strange. We should be, in many countries, aim to be food secure, But food security means you're still dependent on this fertilizer that you're importing, which is very odd as well. And the world that we live in now, we have so much raw and waste materials. Like for example, Thailand produces so much waste, agricultural waste, corn biomass, rice husk. Like we have so much kind of material that comes out of farming. You can process that back. I mean, there's a lot of deep tech and science here that you need to do, but you can use that back into the farm fields and kind of, you can also improve the yields. And those things go hand in hand because of science technology. But it's just, to me, like very weird that we are almost exporting a lot of money and not keeping it here. And we hope to kind of cut that by half. So at least like half the money stays here, and you can then pay the rice mills for the rice husk biomass that you're buying, and then they buy more rice from farmers, and like the whole loop kind of accelerates kind of progress. But, or at least regional self-sufficiency in fertilizer would also be good.
Yeah, I mean, I learned, I think you told me we have about 60 harvests left in this world, right? Because we've killed so much soil with chemical fertilizer over the last 20, 25 years, and we've just exhausted the yield at this point. So I think there's two things from both Gagan and Abby's side here that stands out, right? One is, if you're an entrepreneur or an investor, look at where the money flows, how it flows to certain industries, right? And how it flows from the country out. So when it flows from the country out, in Abby's case, we're dealing with a critical infrastructure need, fertilizers being imported, people are paying high tariffs for it. How can you, for example, work with that? What other things is needed? Energy, whether it be clean tech, whether it be something third. The factor here is asymmetric information, right? You're able to see that there's something here missing, and that's where you want to plant your product. So I'm curious, we're also getting closer to the Q&A here, but say I had a check for both of you, right? The check, you could write whatever amount you wanted, but you had to start a new company. Given the current state of this world, what would you start?
Oh, that's a tough question. Like, sign whatever, like blank check.
Okay. let's say $2 million.
Okay. So I have a finance background, so I have a natural inclination to fintech products. So what I would do is probably build something which is into SME lending in Thailand. I want to make it more relevant for audience here. Because what is happening is Thailand is a very, very good SME market, right? The unit economics here makes sense. People have decent margins. But the problem is they don't have access to capital, right? Banks don't really, it's very, very hard to get money from banks. Banks ask simple question, what collateral are you willing to put in for me to give you money at 6% per annum? But most of the SMEs don't have that kind of collateral. And they don't know any other way to get access to capital apart from going to loan sharks. So there has to be a privatized institutional network, which is slightly expensive than banks, obviously, but still at a rate which will make more sense for SMEs to grow their business. And I think in Thailand market, that part is missing big time. So I would probably build that.
So actually use the capital to give people more access to capital.
Absolutely.
That's very, I like that.
Yeah.
Abby.
And the margins are not bad.
And the margins are not bad.
Well, I mean, I like my business now, so
there we go.
I'll take the $2 million for living roots.
All right.
But otherwise, I think there's a lot of space in the agribusiness. I think I don't know how many people have worked in farming, but there's so much gap in Southeast Asia and what we could do. Like cold chains is like a huge business that you can build. Like if you can portable shipping container cold chain like it to a farmer's door, and they can extend their garlic product by 3 weeks. That's a business, right? Like no one's doing that. But currently, like, a farmer has to sell their garlic straight to market on the day they harvest. Like there's so many of these small things that if you look at the industry, you can almost make any product. And the size of the market is so large that it'd be easier than living roots, but you could basically become a unicorn just with cold chain shipping. And at the moment, like fruits and vegetables don't last more than 3 days. That means almost a few $1 billion worth of product spoils monthly in Thailand. And so if you fix that, that's already a great business. So I think there's so many of these opportunities that exist in the ag space, but since not a lot of people end up in those environments, you don't see it. But I think it's cool to explore, and you'd be basically have 20 million customers in Thailand, because there's about 20 million farmers that you could target. So I think that's pretty cool.
That's fantastic. So the funny thing is that the startups pretty much relate to what you're already doing to some degree. And I think that's a very golden takeaway when it comes to your industry dependence and interest and expertise. That things are changing, everybody, right? I mean, things are not as they used to be, to the degree that we can now do things exponentially faster. I'm not a coder, but if I don't know how to work with code to some degree, I'll most likely be obsolete in a few years. I think that's what the data shows. We are about 20 minutes before 8, and I would love to hear if anyone here is sitting with a question. The floor is basically open. If there's no questions, we'll carry on with the conversations. There's plenty of things to talk about. But I would love to hear from the audience if there's something that's come up, if there's something you'd like to ask the panel. So if there is, raise your hand. Raise your hand, don't be shy. There's one in the back. Billy, you want to be the runner? Yep. Just be aware of the microphones. Please also share your name.
Hi, my name is Paul. So I want to actually counter your statement about SaaS products. I think if you have like industry expertise, like you have been in the industry for 10 to 15 years, right? This is the best time for you to make something for specific to that industry, and you can do it without like no capital at all. So I kind of don't agree that SaaS products are dead. I think SaaS products are just starting. It's just the companies are going to be different. They're not going to be really relying on software engineers and finding people with capital. They're relying on people who have expertise and can build it with vibe coding, by learning a bit. I have my tech company in Bangalore. I learned from my engineers how to actually do more than just vibe coding, how to build the whole stack, and I'm building it myself.
So again, fair points. SaaS will exist. I think you misconstrued what was said, Paul. So I'm not trying to be defensive, but the point is, where are VCs not investing money? Because VCs are thinking, as you yourself said, I can build it without any cost. But that's true for everyone in the room, right? So your barrier to entry is rather limited. You said you're not even engineering background. That's true from quite a few people in the room, right? So if you can build it, what's stopping for others to build it? So it becomes very difficult to build a sticky solution, even though you have an industry knowledge, that cannot be replicated. So, and like SaaS, there was a time everybody used to love SaaS products. The multiple on SaaS product was 3 times than any transaction business, right? Why? Because once you are embedded into anyone's system, they're going to continue using you again and again. But now what has happened is, because the barrier of entry is so low, competitors crop up very quickly, and consumer has become more cost conscious by the day. There was a time enterprise software used to cost you a few $1,000s a month. Now nobody wants to pay a few $100s a month, and that's the case. And if you look at financial performance of few SaaS businesses, it will validate that. So while I 100% agree, SaaS is not, people will still need software for sure. But what about the feasibility of investment? Not many investors are finding it very lucrative at the moment.
So I would like to believe that network is the net worth. So when you build a network for 10 to 15 years, you use that. When you're ready with the product, you build that, and you quickly get an advantage over other people who are just thinking. So I would like to believe that. I agree with what
100%, for sure. And I'm not saying that there will be outliers. There are always outliers. There will be some, like Harvey, right? Harvey is still you'll call it a SaaS solution, right? Which is AI-based legal, right? But so that company grew to a few billion-dollar valuations in no time. So there is an outlier. But what happened with the latest Anthropic release? You know that the valuation dropped by 50% overnight. So while 100%, if you believe something, go build it. And there's no bad or good. There's only VC investable business, non-VC investable business. You still can build wonderfully profitable businesses. So if you believe, if you have conviction, by all means go. But if you talk about the market dynamics of where investments money are coming, that's a little bit not desirable at this point.
Yeah, I mean, I think makes a lot of sense. I think the cool thing now, because I come from a software engineering background, is you can build something super specific for your customer that you couldn't do before. So you could build something exactly that they need. And that's why I think from an investor side, it makes a lot of sense. But from building a good business, like you can build an excellent business because you can build their entire workflow and better. Like you can almost do exactly what they want you to do in almost 1 day's worth of work. So you're like, here's 11 websites for 11 different customers that you can do, which is an excellent business. So I think if you are in that space, just go out and like get a lot of revenue. You almost have 95% profit. That sounds pretty good.
Yeah. And just to end it on the very positive note, so you said network is a net worth, right? You're spot on. Because YC's recent statement is that the next billion-dollar companies will be service-based businesses, not the tech businesses. And you have network because you have been in the industry, you understand the space. So it's a mass market. It's just that it won't be called SaaS, it will be called something else. But essentially, if you know your stuff, you're good at what you're doing, this is the best time to even start a services business, I'll say.
Okay, I'd like to speak. Hi, my name is Carsten. I'm working for a Thai-German project, so it's a cooperation between the two ministries of agriculture. So I'm happy to see somebody else, Avi, coming from agriculture. Question is, this combination, you said one of the hot topics is AI. What is the combination of AI and agriculture? So agriculture extension for farmers. We really recently also, let's say, launched a hackathon on this topic without, let's say, ourselves knowing how to take that really a step further. So are there any kind of investors for this kind of technology? Because farmer, I think, will need that. I would be very happy. Extension service physically is not able to reach everybody, and there are at least 8 million farmers and probably with families. So is that a hot topic? And let's say, who could also help, let's say, to shape a bit the ideas how to approach that? Because maybe, let's say, there's people who have ideas and developing something, but they are not yet there, as you described. They have this trackability, what do you say? Traceability and the track records or whatsoever. So that's maybe a very peculiar topic. So how to make these people fit? I mean, at least that's something we would like to help, but let's say I don't have the knowledge, but I would be happy to link people to that. Thanks a lot.
Just so I get the question, so is the question how to set up the solution with the combination of AI and agriculture, how to get the capital for it?
Yeah, the thing is like, is that an interesting topic for someone to invest, and how to get the money for it? Because the technical side will be done, but how to finance that it go
Sure.
to market?
Sure. I mean, I can admit that over the last 2.5 years that I've been looking into agritech, I see it as a business that is it's going through a renaissance, right? The same thing with AI. Someone told me that the way we will think about AI is the same thing we will think about electricity. So AI is not necessarily going to be the competitive advantage in your product from an investor's perspective. I'm going to come back to that network, right? The competitive advantage lies in the ability for you to reach the most amount of people and deliver them the most amount of value. Yeah. And that's where my question then is, what does that mean? Because if I am to entertain anything with AI and plus whatever, I would look at, so how is that value quantified? Is it just that it's nice to know, XYZ about how your soil is doing? Or can you derive it all the way to the end point of saying, we guarantee a 20% yield increase in your farming practices? Or this is more it's more suitable for subsidy from the state because now they can data drive their allocation of capital. That's the difficult part I see with AI. Because everybody can put AI in anything, that's fine. Where's the value? Like, who is the person now? What is the community that you're bringing value to? That's my perspective. I don't know if you want to reply.
Spot on. AI is simply an enabler, right? Now, if you're talking about some deep tech that can help enhance efficiency of the crops, of course, from the outside, it makes complete sense. But then whom are you selling to? You're selling to farmers, and it's a B2C product. So if you deal with them on a day-to-day basis, it's one of the most difficult sectors to extract money from. So monetization becomes a challenge. So while from the outside, it's a very interesting space and a massive space, but the monetization needs to be validated, that how will you make money? Will farmers adopt it? Because everybody hates changes, right? Tell them to use one product, they'll say, yeah, okay, tomorrow. Don't like, it's a hard, and sometimes farmers are not the most educated segment as well. So they are a little bit skeptic with what you are offering them. So first is, how have you validated that there's adoption? So the traction part. And then the second part of that traction is monetization. How many of them are paying you? Both these metrics you have. So if I was you, I'm not going to go and say, hey, I have built something that will enhance efficiency of crops by 20% yield. But I'll say, last year, I sold this to 20,000 farmers who paid me $30 every month. And then I got a share in the yield also by another 10%, through which I made $1 million. You will have more investors backing you up then. So unfortunately, it's a numbers game. So it's how you pitch it. So traction needs to be validated in this case.
What about you, Abby? I know you're building a few things like that.
Yeah, I think it's tough because the customer is your farmer, the farmer is your customer, and I think in all my conversations with investors, they don't like it when you say your customer is the farmer. But for us, we say we're B2B, so we sell to businesses that have farmers. So it's slightly easier of a conversation. So if you build business tools, for example, like a dashboard of your farmer soil health, and then like they can monitor maybe 1,000 of their farmers, like that's a bit easier of a sell because you're billing the larger customer. So I think that's the only kind of way out of this. But I know a lot of companies in India and Bangladesh have created businesses out of soil testing. So I think those are good examples. Yeah. But I think we'll see more of these tools in the West because the average farm size there is 5,000 acres, which means even with $1, you will be at a good revenue. But here, since one farmer has like maybe 2 acres, it's like you would have to charge them $300 to make it work.
Sorry. But yeah, sorry.
Yeah, go ahead.
But there's a heavy private equity business happening in this space recently. So a lot of companies who have a validated traction in the farmer space, in the mineral space, in the fertilizer space, so many $20, $30 million acquisition are starting to happen. At least in my network, I know some dedicated funds who are looking into this segment.
Well, I like to say, I think even though there is a lot of chaos, as it says, I think the opportunities to do things have never been higher. There is a lot of people in many countries in Asia that need solutions that improve their margins, profits. So I think in these times when oil is more expensive, fertilizer, whatever have you, I think there is more opportunity to start a business. I think it's not less, it's more. And there's a lot of people looking to deploy capital if you can find the opportunities and kind of grasp them. So I think that's what we're trying to do is, like the opportunity is to make a replacement to chemical fertilizers. And there has never been a better time because it's the highest price it's been in a long time. And there's probably thousands of industries that are doing the same thing. So if you can just spend like 2 months looking for where you are passionate about finding those things, I think this is the right time. I think the best businesses are kind of built at the worst time. So I think it's a cool opportunity to live through now. So I think, just build something you like.
Yeah. I'll say something contradictory, right? So the first thing is that VC framework, venture capital framework, is actually going through an identity crisis in this part of the world. It's going through a recalibration because this system is being followed, actually copied from the US, right? Where model was early stage, huge capital, massive growth, then the company would probably be listed on NASDAQ or get massive M&A. So early stage investors used to get outrageous returns and it made sense. But Southeast Asia market is very, very different, right? It's 700 million people across multiple countries, different languages, different currencies, different legal system. So replicating the same framework here is A, very difficult, B, there are not exit opportunities for people to go because there's no stock market like NASDAQ, right? So VC market or the investment space is itself going through a recalibration. So it's a very negative statement, right? Okay, that means there is no money, but actually not. Contrary to it, there has never been a better time to build a business because previously there was a lot of barrier to entry. So if you are a business person and you want to build a software company, you had to go and find a CTO, right? and then pay decent salary to that CTO, build a product in 6-7 months, spend hundreds and thousands of dollars. Now, MVP, minimum viable product, used to be a milestone in companies' investor deck back to a couple of years ago. Like, after receiving this money, 6 months later, we will build an MVP. Now, MVP is a starting point. You go to the investors, so tell them, I built this using natural programming language, lovable, whatever. I have tested it with 100 customers. 5 of them have started paying me. I think I want to something. I need money to further enhance my product and then sell it to larger customers. The pitch has changed. And you don't need that much money what you used to. So it's actually a great time to build sustainable business. And I'm telling you, running a service business myself, the scale comes very, very quickly, quicker than you think. You don't aim for this Herculean milestones of $100 million top line, 200 million. Forget about it. If you reach it, good. But even a $2, $3, $4 million business with decent margins is a very, very good business. So barrier to entry is low. Go start tomorrow if you want to. Investor money come, not come, you should have a paying customer, because that's what the real business is. Focus on that, and you know what's the funny part? Once you solve that problem, VC money will come. So go for it, and best time to build the company.
Yeah, fantastic. Thank you, everybody, for this evening, and we're only about to start, of course. My final notes will be, you know, we might not be as big as the US, but this is Bangkok, baby. We are here. This is the Bangkok Startup Association, and you gotta be a little crazy to be a founder. You also gotta be a little crazy to be an investor because you believe in the founders. So I just wanted to say that before we close up, and gentlemen, please be seated still. We have to take all the nice pictures, but we also wanted to announce that since network is the net worth, I think that's a great takeaway. We're also hosting one of the Bangkok's biggest networking events for especially the founders and the investors who are a little, a little crazy. Be a little crazy with us. So, Billy, you want to put it on? So please join us at our next startup event in June, as soon as the sound works here, which is our Disruptors Network event. And there we go. Yeah. Hope to see you there. The ticket is on sale today at a special price of how much? Billy?
888 baht, a very special price for only tonight until midnight.
That's the AI. That's not Billy. That's President AI. So thank you, everybody. Network is a net worth. Please get to know each other. The speakers will stay around. Thank you so much. Let's give them a big hand, big applause tonight. I hope you've taken some from this. It's been an absolute pleasure. Thank you both.
Thank you
for being here. And now to a few pictures, and then hopefully a cold beer. Thanks.
Yeah, thank you. That was fun.
Yeah, very well done.
Yeah, hope you enjoyed it.
Yeah.